Welcome back to the Retire Young radio show. My name is Joshua David, having a great time in studio with my great friend, my great pal, Mr. Al Connickson. Don't forget to subscribe to the Retire Young podcast on Apple Podcast, iHeartRadio, and Spotify. Make sure to leave a comment and different topics you would like us to cover next. So as we get into this last segment, Al, we still have more to discuss about retirement and retirement accounts because we do have this retirement crisis, and it's our duty to help people all across this country really become more financially literate, especially in their retirement accounts. Now, we mentioned self-directing on the last segment. It's managing your own accounts, and most people are making those decisions in their accounts, but they're doing it without the knowledge, the education, and also the skills. So how do you, if somebody wanted to self-direct their own portfolio, how is that process? Because I know you've helped a lot of people do that. What are some of the first things they should do and some of the key things to, I guess, focus on when they're going to self-direct their accounts?
Right. Well, the first thing that you can do is set up an account, and any of the, especially the discount brokers, will let you set up a self-directed IRA, whether it's a traditional or a Roth. And by the way, if you have a 401k, 403b, or any employer-sponsored retirement plan, and you're no longer working, whether you've been fired, laid off, whether the company has gone out of business, if you're no longer working, you can roll your 401k, 403b into a self-directed account, like the self-directed IRA, traditional, or Roth IRA. The great thing there is a number of things. Number one, you eliminate the fees. Number two, you have many more choices, not just mutual funds, not just individual stocks. You can trade the leveraged assets that we talked about, futures, Forex, options. Options gives you the opportunity to have an insurance policy on your portfolio. But we're not saying you should go ahead and do that transfer or set this account up, and then you just start throwing money at the markets. Get educated first. Do simulated trades. You know, practice is a big part of getting this right. It's the education is comprised of a number of components. Number one is the knowledge. Number two is the skills to use the knowledge. And then repetition of what you've learned under the guidance of somebody who does this on a regular basis. And then being part of a community of people that are like-minded who will help you. And we have a lot of students who mentor other students, for example. But once you have gone through the education, you've done some demo trades, you feel confident in your ability to take a bit of your money and start to invest it. Take a small amount. We always encourage our students to start with maybe 1% of their investment portfolio in any individual trade. But since you're already making the decisions in your retirement accounts, in your 401ks, 403bs, why not just do that in an account where you're not paying any fees? Why pay somebody just to hold your money there? You know, and a lot of you are used to mutual funds, and that's because that's what Wall Street has sold you on. And they're going to tell you, look, you have a money manager. You know, a manager with expertise is going to make the right decisions to protect your money.
I love that one.
Yeah, well, the truth is that between 80 and 90% of the mutual funds underperform the index that they're met to beat. So just having an index fund alone with very low fees, you would have been better off with that. But what about crashes? What about bear markets? Aren't we in better shape if we have a manager during those times? Well, in a mutual fund, understand that a mutual fund manager cannot short the market. They can't go to all cash. But Al, can't they change what they're invested into something that's working, like going maybe from energy to gold? The answer is no. They have to stay where they are. And they're going to tell you you're protected because they're diversified. Well, it doesn't matter if you have a few stocks or a few hundred. If all the stocks in the sector or industry that you're in is getting hammered, they all will, and we'll teach you about proper diversification because that is very important.
Well, who's going to be the best steward of your money? It's going to be you. And if you understand the different techniques and the different concepts that are available to us, well, that's what most people want to do, and it all comes down to taking action and learning that skill. And it starts with some knowledge, and you talk a lot about this knowledge in these investing classes, what the institutions are doing, why they do it, why they're selling these mutual funds to everybody, because it's helping them. I mean, there's different concepts that we can do that may be a little bit different that I'm going to ask you coming up here in a second. Now, there may be an alternative to mutual funds, and a lot of people like to trade with exchange-traded funds in their retirement accounts. Explains what those are.
Yeah, an exchange-traded fund is similar to a mutual fund, but it's typically a non-managed account. And the fees to be involved in ETFs are close to non-existent, very, very inexpensive. But ETFs, it stands for exchange-traded fund. It's a basket of stocks that mimics something. It could be one of the indexes. It could be the Dow or the NASDAQ or the S&P or the Russell. It could be technology. It could be financials, healthcare. There are thousands of ETFs that are available, and it gives you the opportunity to be diversified within an industry or a sector with one investment, and it trades like a stock. You can get into it and out of it on a daily basis. And by the way, with mutual funds, you can't do that. You can't buy or sell a mutual fund during the day when the market is open. It has to be at the end of the day when everything is kind of figured out, when they do all of the reckoning of the components of that mutual fund. So exchange-traded funds will mimic something. There are also what we call inverse ETFs. That's an exchange-traded fund that goes the opposite direction of the underlying. Let's use the S&P 500, for example. A typical ETF, SPY is the symbol, SPDR we call it, that mimics the S&P 500 close to dollar for dollar. So if the S&P is up 10%, it should be up close to 10%. An inverse ETF that mimics the S&P 500 will go the opposite direction.
I believe that ticker symbol is SH.
Yes, it is. So if the S&P 500 is going down, that ETF will go up in value. Now, in a self-directed IRA and in your 401ks or 403bs, you can't short the market. Shorting is a way of making money in a down market. It's something that all of the big players use, and we will teach you about that in these classes that Josh has been talking about. But you can't use shorting in a retirement account. You can, in your self-directed IRA, use an inverse ETF. So you can get basically the same benefit of shorting without having to go through that shorting process. Options can be used in your self-directed retirement account, number one, as protection, as an insurance policy. Options can be used to participate if the market's going up. They can be used to participate if the market's going down or an asset's going down. And they also can be used if something is going sideways or maybe trading within a range. A number of different things you can do. Options are something that it's a contract you trade on an underlying, like a stock or an ETF. But it allows you to participate for an amount that is much less than putting a full stock position together.
Yeah, well, you can basically obtain a stock at a fraction of the cost.
Exactly, and for a lot of
that's the buying power.
It increases your buying power, and for a lot of people right now, a lot of the stocks out there are extremely expensive. So it's hard to put one position together, unless you have a multi-million-dollar account. So options allow people to participate that might not otherwise have been able to participate. And they can be used. Options can be used with a stock portfolio just to boost the returns on that portfolio. When you go into retirement, for example, maybe, you've worked maybe 30, 40 years for your retirement portfolio, and you don't want to take a lot of that and maybe invest that into stocks or some other asset. But with options or with futures and Forex, because of the leverage, brokers require less.
Well, it's always all about maximizing your capital, Al. I mean, if you have buying power and leverage, use it. And it's just like a credit card. It's just like purchasing a home, a mortgage, utilizing the house money. Now, and also knowing about these other opportunities, these ETFs, these exchange-traded funds, more opportunities to us as investors. And, you teach a lot of these investing classes, Al, every single week, and you look for a couple different things. You look for people that want to be coachable and, willing to learn. And I know a lot of our listeners are willing to learn. We've been seeing that with these investing classes. But you also are looking for people that are disciplined. If you have the discipline to follow a plan, we talked about that GPS in the second segment, have that GPS, follow that plan. And then you have to be decisive. It's all about just being able to click the button, because trading and investing, this is all electronic now. So you have to click the button, place your trade, and let it work for you. Al, every week you talk a lot about these words of wisdom, and we've been hearing some good feedback about that. People want to hear more about that wisdom and just be able to be more comfortable but also confident in their investing. Let's hear that this week.
Well, I think it's interesting, Josh, when we start out as a child, and you have a son, a young son, but when we start out, people say, what do you want to be when you grow up? And typically it's, I want to be a doctor or a nurse or a fireman or policeman. I want to own a business. I want to be rich. And then somehow over the years, we accept the idea that it's just too hard. I can't do that. I'm not smart enough. It takes the same amount of effort to say, I can do that. It's not too hard. I am smart enough. So instead of limiting yourself and never achieving your potential, remember, you have the choice. You're the only one who can choose to do things differently to achieve different results.
And that old saying, knowledge is power, but that doesn't happen without action. Till next week, retire young, my friends.